Hello everyone and welcome to ICM's midday session. It's a bit quiet in the market today. The dollar is losing some of its gains against other major currencies. Gold is still on the upside while stock indices are still hovering in a tight range. What we're waiting for mainly today, ISM Manufacturing PMI from the United States, which could give us a signal or a hint on the performance of the manufacturing sector during December, and also the results of the Georgia election. In addition to oil traders, they're waiting for any hints of a deal on OPEC plus output for February. This is in terms of events or economic indicators. Moving to the charting, the euro dollar, as you can see, the market yesterday, we had this daily chart. The daily candle was the euro lost most of the gains, and now it's recovering on the day. So if you go to the hourly chart, we can see this dip, and then the market is recovering from the fall. So, but on the bigger picture, we're still trading inside this channel. Nothing much has changed. We're still stuck inside this channel. And on the other, the closer picture, we have this range trading that we're stuck in 123.10, almost 122.10. So it's a 100 pip range that we're currently trading in. And if we're able to break above the previous top, we could be rallying towards the top of the channel near 23.65, while a failure here and drop below the bottom line of the channel at 122.10 could lead to a bigger correction in the fall towards 121.20. The British pound against the US dollar, also following its sharp decline yesterday, was able to find support near the 200-hour exponential moving average, had a bounce back higher, and then another dip to the 200-hour exponential moving average. You can see here how the moving average is held for 2 times, and now we are moving back higher. You can see also this percentage that the market is slightly almost retraced 38.2 to 44% of what the market has lost yesterday. So we need to break above yesterday in order to continue with the previous rally. So you can just highlight this 36.20, 36.15. You can see this area here. It's a key area previously. So breaking back above it could just lead to a bigger chance to retest the highs of almost 137. However, now we're building here also a solid support near 35.50, which is the 200-hour exponential moving average. Moving below it could just lead to a bigger correction and another drop towards 134.30 on the British pound against the United States dollar. So this is the range, and you can trade the break out of this range. The dollar against the Japanese yen, it's still in the same trend. You can see on the hourly chart the pullback from yesterday's low, and then the dollar is losing its gains again towards against the yen. What we can highlight is just the previous bottom, 102.60, almost possible support 102.20 could be coming next, while we need definitely to move back higher above at least 103 in order to just turn bullish again or slightly bullish, while a confirmation for a move higher or an uptrend could just be by breaking above the trend line, combining these previous tops, which is settling almost near 103.20. So we need to move back higher above this line here in order to turn bullish, and then we could be retesting 103.85 that you can see here 1, 2, 3 times. We weren't able to break above it. The US dollar against the Swiss franc, similar formation. The dollar was weakening again today. However, we're stuck in a bigger in a tighter range again. So this range near the lows 87.84 and the previous bottom and top 88.20. So this is almost a 30-40 pips range that we are currently trading at. So this is the previous bottom turning into resistance. Breaking above it could just lead us higher to the interim top of 88.60. On the bigger picture remains 89.20, 89.45. This area here remains key area for sellers. So breaking above it is something interesting for the dollar against the Swiss franc. However, as long as we're staying below this, we could be poised to retesting 87.20 as the possible coming support area. The Australian dollar against the United States dollar, mainly most commodity currencies, we saw yesterday a weakness against the US dollar. However, now we are rebounding again. So yesterday we talked about this double top formation. The double top was successful, and the market went for a certain target. Well, also you can just draw this trend line here, which is combining the previous bottom. You see the market was almost close to to this to the low, which is also coinciding with the average, and then bounce back higher. So we can highlight this just 77.40, and the support line of the double top formation 76.80. Moving back below 76.80 just turn bearish again. We could be moving towards 76.40 again. However, staying here would just add the chances of breaking above 77.40 and paving the way towards a 78 target. 78.15 could be the possible resistance area for the Australian dollar against the United States dollar. You can just draw from the top to the bottom. You can just draw an extension and see the possible extension levels that could come in. So you can just highlight 161.8, the derivative of 61.8% Fibonacci. It's almost near 0.78 level. Moving to the New Zealand dollar, similar formation. You can see here almost double top, a break lower towards the 200-hour exponential moving average, and then the market bounce back higher. Also, you can do the same, just highlight 72.40 in the previous bottom, 71.50. Falling below 71.50 could just turn a bit more bearish for the pair, driving it lower towards the 70 key level, which held for a while in December. So this is a key area to just focus on it for the. Well, if you want to set some targets for the market move to the upside, you can go for the Fibonacci extension, where 72.95, almost 72.90, is a possible resistance or a possible target for the New Zealand dollar against the United States. Moving to the US dollar against Canadian dollar, it's a bit different than other commodity currencies due to oil weakness. So the market was falling. The dollar was falling against the Canadian dollar. So, and then the market rebounds higher towards almost 128, and now we're moving back towards 27.30. The dollar is weakening again against the Canadian dollar. However, still the Canadian dollar is not as strong as the Australian and the New Zealand, and we stated that because of oil weakness. So you can highlight in terms of possible support zones, the previous bottom 26.80 along with yesterday's bottom of 26.65. This is a possible support area, while the resistance is yesterday's high, which also coincided with the previous supports and resistance. So this area here, 28 to 28.40, is a key resistance area. Breaking back above it would just turn bullish again for the pair, driving it towards 29.57. So we're stuck in a key range where we're breaking into each of the other side could just lead to a trending move. Gold price is continuing higher, still strong on the day. We had yesterday a couple of corrections following the test of 1940, but still on the bigger picture, we're still trading higher, 1948. So this was the tight consolidation zone that we were stuck in for a while, and then we were able to break above it. So moving back below 1940, 1945 could just turn bearish again for gold and lead to a bigger correction towards 1934 first level, then possibly breaking 1920 again, moving to close the gap. This could be the bearish scenario for gold. However, as long as we're above this, we could be poised to retesting, as we mentioned, the trend line and the channel. So you can just set a couple of boundaries for the channel. You can use the previous spot tops 1, 2, 3, 4, and 5 possible rejection here, 1955. While also you can just draw another line for the previous top exactly, which could give an extended target towards 1975. So by this way, you can just set the possible levels. You can see here this line is very valid. We had previously 1, 2, 3, 4, 5, 6, 7. So it had a couple of times the price was having different changes here. So so this is for gold. Moving to silver. Silver is also strong, but failed to break above yesterday's high yet. So you can just go back to previous points. Also for silver, you can just draw this trend line here, combining the previous bottoms, and you can do this for possible targets. You can just choose the previous tops. It's either the last significant top or the previous smaller tops in order to check some targets for silver. 27.50 continues to be a key level. It was previously a key level, so breaking above it could just drive the prices higher towards 28.40, 28.85. WTI or oil prices yesterday had plunged following on the fact that OPEC failed to reach an agreement, OPEC Plus, until now. However, technically speaking, you can just draw a trend line combining the previous bottoms, and then the market fell exactly towards the bottom, and now we have a little bit of a bounce back, trading near the 100 and 200 hour exponential moving average. So breaking back below this trend line could just lead to bigger correction. 46 and on an extended target to 44, these could be the possible targets. While moving higher, we need to move back above 49 almost in order to tackle the previous stops between 49.50 and 49.70. So this is all for today's session. We forgot the Dow Jones. Moving to the Dow Jones, which yesterday had plunged sharply. If you go for the previous setup that we were drawing for Dow Jones, you can just set the tops and bottoms and trade in it. You can see here the 1, 2, 3, 4 exactly the market rose towards the top of the channel 5 and then bounced back lower from it, trading near the 200 H4 exponential moving average. Currently we're in the middle of the channel, so you can just set the dimension or the boundaries of channel as the key levels to watch out for. Definitely this 30,300 was previously key resistance, moving back above it. So you can see here was resistance previously and support recently. So this makes it a key level. Moving back above this area is crucial for Dow Jones in order to recover losses. Maybe we can be heading towards 30,600, 30,800, while falling back below 30,000. 30,050 could just turn bearish again, and we could be targeting first 29,870 and then the bottom of the channel near 29,000. This is all for today's session. I would just like to remind you that all the information, news, analysis, and opinions mentioned in this session, they're only for educational purposes and shouldn't be taken as signal whether to buy or to sell any financial instrument, and ICM